Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. The euro and French bond futures fall as the finance minister tells us exclusively the government will not accept ultimatums over its budget.
We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
President Joe Biden signs a sweeping pardon for his son Hunter, reversing his previous stance just weeks before leaving office. And Carlos Tavares quits Stellantis in a dispute with the board over how to steer the troubled car maker away from weak sales and a stock slump. Happy Monday. European futures pointing lower. There could be a further drag coming through from France and equities there on the politics and the brinkmanship over that budget. European futures pointing lower by 0.9% after a week of gains last week. The FTSE 100 futures currently flat. S&P futures pointing lower by 0.2%. Nasdaq 100 futures also looking to drop 42 points. Non-farm payrolls is the data point of the week, arguably, when it comes to the US, dropping on Friday. Let's flip the board and look cross-asset. You're seeing quite significant selling pressure across US Treasuries right now, with yields up, price down, 421 right now on the US 10-year. And you can see what's happening in terms of euro-dollar as well. Currently 105, the weakness coming through for the euro, and you can tie that, of course, to France, but also strong dollar. 150 right now on the Japanese yen. Gains of around 3% last week for the Japanese currency. Today, giving up some of those gains, down 0.6%. The governor, Ueda, of the BOJ, giving some commentary in a newspaper over the weekend, suggesting that he is still open to the prospect of another hike in December on the 18th. Brent trading at 72.26, currently up 0.6%. Now, France's finance minister has told us he refuses to accept Marine Le Pen's demands for budget changes, saying the government won't be blackmailed. The political standoff has led to market jitters, with the euro slipping and France's borrowing costs rising amid concerns, of course, over a potential government collapse in France. Antoine Armand spoke to us exclusively.
We respect each and every MP, and we respect each and every people in France, whatever they decided to vote or not to vote, of course. But what's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a country, a continent of prosperity. That's what we aim at. And for that, we need all political leaders to be responsible.
With these concessions that we've seen in the budget, they're going to cost about 10 billion euros. Does that mean you can actually keep this 5% deficit target? Or do you believe perhaps it will be slightly higher, like 5.5, or perhaps higher?
As I told you, our commitment to reduce the budget deficit towards 5% in 2025 and towards 3% in 2029 is not an option. It is something we are very carefully looking at. What does that mean?
But can you actually fulfill this?
Yes, it means that at every time that we made adjustments on our budget, we compensated it with saving, with new measures. It's clearly an important point to underline here. We are committed to this 5% target in 2025.
That was our exclusive interview, of course, with the French Finance Minister, Antoine Armand. Let's bring in Caroline Conat, who conducted that exclusive for us, joining us out of Paris. Caroline, they have made concessions. The National Rally, Marine Le Pen, Jordan Bardella, they want further concessions. What did Armand tell you about whether or not further concessions are coming?
It seems like the government has already done some concessions and doesn't want to do more. And in fact, Antoine Armand repeated several times that they don't want to be blackmailed and they will not accept ultimatums from Marine Le Pen. As you know, Marine Le Pen has set a deadline of today, Monday, probably mid-afternoon, to see if she's actually going to back or not a vote of no confidence, which could potentially lead to a government collapse as soon as Wednesday. We'll see how this pans out. Clearly, Michel Barnier has repeatedly said that he's already done lots of concessions, for example, on prices of electricity, on the reduction of social contributions, and even on pensions. He's already done some efforts with the lowest pensions actually that are going to rise as soon as January. Marine Le Pen wants more, but they don't want to have more concessions because what they've already done is already going to cost 10 billion euros, and they were planning to save 60 billion euros in this budget. So clearly the savings need to come from somewhere.
So, Caroline, what are you and the team watching for next? How does this unfold from here?
Today, there's going to be probably a vote on the social security part of the budget, which includes everything on pensions and also on drug reimbursement, which is something that Marine Le Pen also wants to change. And if obviously there is no majority, then Michel Barnier, the Prime Minister, will have to use his 49.3 article in the Constitution to provoke himself a vote of no confidence that could happen as soon as Wednesday. So we'll see whether the National Rally actually accepts some compromise later today. They're going to have a meeting with their National Rally lawmakers. There are 120 lawmakers from the National Rally in the National Assembly, probably around 2 p.m. French time, and then we'll find out exactly what they're going to vote. But you know, for this motion of no confidence to actually make the government collapse, you also need the support of the socialists, because the socialists, they have 70 lawmakers as well. So if they do not support this no confidence, in fact, Barnier will stay in place. And what's interesting in this interview with Antoine Armand as well is that he also opened the door to perhaps the socialists, rather than just discussing with Marine Le Pen, which they said they don't want to do anymore. Perhaps the socialists could be the way out here for Michel Barnier in order to avoid a government collapse this week.
Bloomberg's Caroline Connor, excellent, with that exclusive, of course, the French finance minister on what could be a make-or-break week for this French government. Let's bring in Bloomberg's MLive strategist right now for the market analysis and moves around this, Mark Cranfield, for the detail and reaction. Mark, we got to our 90 basis point spread of French over German debt last week. Where do we get to this week? What do you expect the market reaction to be to the developments we've seen over the last 48 hours out of Paris?
Oh, bond traders think it's an early Christmas present for them. They love volatility when it's created by the French bond market. And it's not just about the spread with Germany. What's really interesting now for them is that French yields are already above Spanish and Portuguese yields, and they're pretty neck and neck with Greek yields now. So it's an all-round play here. French bonds are underperforming against several of their peers in Europe. It's no longer just about what's happening with Germany. And that gives added fuel to any downside bets on French bonds. So traders are pretty excited here. It's the beginning of the month. They've got fresh P&Ls. They see some negative news coming out of France. It looks like it's going to be taken to the wire. This could be volatility that lasts for a few days. Plenty of chances for them to come in and use the futures market, which is typically at this time of year maybe a little bit less liquid than usual, could push the market around quite a bit. So we will be looking towards that 100 basis points threshold against Germany. Haven't seen that since the European debt crisis more than a decade ago. Everything is in play here, and bond traders are pretty happy about it.
OK, looking for 100 basis points as the next level, potentially an early Christmas present for these bond traders. Briefly, Mark, do traders care more about the jobs data or central banks this week?
It's really more about the central banks. The jobs data obviously will have distortions because of the hurricanes that were on and off. So that's pretty much in the market already. It's more about, is the Fed going to go ahead with 25 basis points? It looks as though the market is getting close to pricing that in. But we've got the Bank of Japan as well. The Bank of Japan now, after what Ueda had to say in the press, looks as though people are getting pretty convinced there could be a rate hike there as well. Within the space of 24 hours, we could have a rate cut from the Fed and a hike from the Bank of Japan. That sets up next week as being pretty exciting as well. That's good for the currency and the bond markets as well. So really, central banks is the big deal. Jobs, of course, it's always volatile, but really keep your eye on what the Fed people have to say. Jerome Powell speaks this week.
OK, excellent analysis for us on what's happening in France and looking ahead to the rest of this week. Our MLive strategist, Mark Cranfield. Mark, thank you. Let's see how Asian markets are faring, then check in with Avril Hong in Singapore. Some optimism, expectations building again in China, it seems. Avril.
Yeah, I mean, if you look at the factory activity indicators, they do seem pretty encouraging. If you're looking at the currency reaction, though, it seems like a bit of a negative reaction given the dollar strength. And this is against the backdrop of Asia currencies really all coming on the back foot today, given the resurgence in the dollar, even though there are factors that typically support these local currencies. You just talked about this with Mark, how the BOJ governor has been talking about how they're nearing rate hikes. Look at how the yen is faring. The yuan is sliding to the weakest level against the greenback since July, despite the expansion in factory activity for a second month and those encouraging signs in the Chinese economy. Some are saying that the big beat on the Thai in the private numbers were because of the front loading by companies ahead of Trump. So keep that in mind as well. Flip the board, take a look at what we're seeing in Asia stocks as we have the tech names doing well. Japan banks are also the ones that are supporting the gauges. Chinese stocks have paired some of the earlier gains. You do get the sense that for there to be a convincing turnaround, more government action is required. Tom.
Everyone in Singapore with a market reaction. Thank you. Now to a major corporate story that has broken over the weekend. Stellantis CEO Carlos Tavares is resigning following a dispute with the board over how to arrest weakening sales and a stock slump. For more, let's bring in our transport reporter Danny Lee. Danny, why is Tavares out?
Yeah, I think there's just going to be no love lost between the unions and the suppliers who will be cheering the fact that Carlos Tavares is gone, and the fact that the Stellantis board decided they're fed up now of the challenges that Stellantis is facing, and particularly how to grapple with the slumping sales and a share price which has fallen 40% this year, and the warning signs that had been coming through from Stellantis, its revised earnings of late, and all the management upheaval happening around Tavares, and more recently the loss of its chief financial officer. So the board and Tavares, the meeting has come to a head with Tavares leaving, and finding a replacement will be quite critical as Stellantis faces quite a dire outlook in the coming months, and so it needs someone who can help right this ship. And for Tavares, seen as a turnaround maestro, they need someone else who can really help lead them forward.
OK, Stellantis looking for a new maestro, new leadership at the top of that automaker. Transport reporter Danny Lee with the details. Thank you. Here's what else to be thinking about this week then. On Wednesday, talking of the central banks, and Mark Cranfield was setting out why they are more important this week, arguably, than the non-farm payrolls. We're going to get the beige book on Wednesday, so building out a picture, of course, of that US economy as we lead up to the non-farm payrolls print. On Thursday, it is the OPEC Plus meeting. Don't forget that was delayed by 5 days. We'll see to what extent there is alignment or, of course, fractures amidst that grouping around where to go next with oil supplies into the market. And clearly, demand out of China will be a picture there as well, and a consideration. And on Friday, it is the big one when it comes to the data front then. The non-farm payrolls print dropping on Friday and could well tie into expectations around where the Fed goes next. Markets do expect now a probability that they will cut again later this month. About a 60% chance being priced in by the markets of that cap. We'll see if the jobs data adjusts that. Coming up, Joe Biden plans to visit Angola, the first US president to set foot on the continent since 2015. We head to Luanda to bring you all of the details next. This is Bloomberg. Welcome back. US President Joe Biden will visit Angola in the first week of December, honouring his pledge to visit the continent of Africa just weeks, of course, before leaving office. The trip will be Biden's only visit to the continent during his time as president, as he seeks to deepen the US commitment to Africa. Bloomberg's Africa correspondent Jennifer Dabasaja joins us from Luanda now. Jen, what can we expect then from the visit, and explain the timing around this, just weeks, of course, before Biden leaves the White House?
Right, Tom, good morning to you from Luanda. Listen, this is something, as you mentioned, that President Biden, it was a promise he made very early on in his administration. And the initial trip that was earlier this year had been sidelined due to hurricane response. But he's just weeks away from leaving office. And so clearly this is a priority for the administration to fulfill this this pledge. And this trip is just as much about the past as it is about what they're hoping to be the future. They talk about how this is important to strengthen and showcase the evolving relationship between the U.S. and Angola. Angola was one of the major hubs for transatlantic slave, but also it's about, as they say, hopefully affecting, showcasing the broader strategy around the economic development and the economic priorities of the U.S. and Angola. And when I talk about that, we've heard from the U.S. that just over a few years ago, they promised to invest $55 billion into sub-Saharan Africa. They're about 80% of the way there. In 2023, Angola was the fourth biggest trading partner. And so it is very strategically important for both sides. But I think what we really need to talk about is the main show here, and really the anchor for the broader U.S. strategy is this Lobito corridor. And this is a corridor, a railway linking the Copper Belt, which is Zambia, Angola, and the Atlantic port. And it's really key to the future EV transition because of cobalt and copper and the plethora of minerals that are in this part of the world. And so the U.S. sees this as an opportunity to help support the investment back into this railway, but then also hopefully help Angola diversify. And from the Angolan perspective, we've heard from the president just a bit, this country has relied for years on just their oil production, and they are trying to diversify their economy away from that. And so hopefully this is an opportunity to showcase that Angola is open for business, but also then that Angolans can go and invest in the U.S. So they're seeing this as a two-way opportunity. We will see Biden meet with President Lourenço. He will also make a trip to the Lobito corridor, and we're anticipating to see more and more pledges and hopefully some MOUs that are signed and announced over the next few days.
And Jen, you talk about the strategy around this. To what extent is pushing back on China and its role in Angola and the continent part of that strategy?
You know, it's key to this, Tom, and I think if you take a look at Angola, just in terms of being indebted to China, it is one of the most indebted African countries to China. And a lot of the partnership and the relationship between China and Angola in the past has been investment into various infrastructure. But President Biden himself has criticized China's approach, the Belt and Road Initiative across the continent, for what he says has been more extractive and saddles developing countries with financial burdens. And so the U.S. is hopefully going to present a different kind of relationship and strategy to what we have seen in China. But we should note that Angola, for its part, is not saying that they are choosing sides. They have a long history, of course, with China, also with Russia. And so that relationship still remains intact. We've heard from President Lourenço saying that that is still intact. But the U.S. is hopefully, and what they told us the other day on a call, is that they're not forcing countries to choose, but instead giving countries a choice and hoping that if there are more choices, then countries like Angola can demand more. We'll see whether or not that actually pans out, though.
OK, Bloomberg's Jennifer Tabashaja on the ground for us in Angola ahead of Biden's visit to that country. Thank you. And sticking with President Joe Biden, he has signed a sweeping pardon for his son, Hunter, reversing his previous stance that he would not use his executive powers to do so. For more, let's bring in Bloomberg's Bill Ferries. Bill, how did President Joe Biden justify going back then on this pledge around his son?
Well, President Biden basically trying to make the case that politics infected the process and the decision about whether to go after Hunter Biden and for these tax and gun charges. And so really, basically, you know, taking on an argument that I think Donald Trump and some of his Republican supporters have said all along, which is they felt like the justice system was politicized against them. President Joe Biden now saying that the decision to go after Hunter Biden was a political decision that affected the Department of Justice. So one difference here is, you know, Hunter Biden he had pled guilty and had been convicted of some of these charges that are included in the pardon. So it wasn't just a matter of accusations. The justice system had found him guilty. He faced potentially up to 17 years in prison, although that kind of sentence was very unlikely. But it is, something that comes after Joe Biden had said literally for months that he would never do. So you're hearing criticism now at this point from Republicans and some Democrats about this decision in the final weeks of Joe Biden's presidency.
Yeah, and of course some of those Republicans were a little quieter when President Trump pardoned a whole list of people himself, of course, and has suggested that he may even pardon the rioters involved on the attack on the Capitol. When it comes to what we hear from Trump on social media, taking aim once again at the BRICS nations around the use of the dollar, what have we been hearing and what has the market impact been?
Well, President-elect Trump coming out and saying, warning the BRICS countries against moving away from the U.S. dollar in trade. That's something that Trump and his advisors have been really focused on. They've repeatedly said that they would hit countries that try to limit their use of the dollar in trade and for other purposes. Saying those countries would face tariffs. He's talking about 100% tariffs on BRICS nations. The reality is the BRICS, although they have discussed moving away from the dollar, they've really made no progress whatsoever on coming up with an alternative. So it's a little bit of an odd threat to make out there. But I do think it shows the president's focus on the dollar and his concern that countries are looking to alternatives to the greenback at this point.
Yeah, and the dollar is surging today, up a little over 0.4% on the Bloomberg Dollar Index. Thank you, Bill Ferries, with the details and the context. Thank you very much indeed. Later in the show, the holiday shopping season has, of course, started, well underway, with picky US customers opening their wallets for the right products. We discuss the changing face of Black Friday later, and, of course, it's Cyber Monday today as well. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making news this Monday. Syria's military has launched airstrikes and sent more troops to push back insurgents in the northwest. A civil defense group operating in opposition-held areas says at least 25 people have been killed. A breakaway al-Qaeda faction captured Syria's largest city, Aleppo, in a surprise offensive over the weekend. Russia and Iran have reiterated their support for Syria's president, while Western governments called for restraint. Georgia's president is defying the ruling party's plan to replace her as protesters rallied outside Parliament in the capital, Tbilisi. Riot police fired tear gas and water cannons to disperse the demonstrators. The protests were sparked by the government's decision to delay talks on joining the European Union until 2028. And Ireland is heading for a return of the coalition government led by the party of Prime Minister Simon Harris. Fine Gael, along with Fianna Fáil parties, the two of those parties, with 2/3 of results announced. The two parties are on track to get more than 80 seats, meaning they will need the support of a smaller party to get to the 88 needed for a majority. And in Romania, the ruling Social Democrats are on course to win parliamentary elections. That's according to preliminary results. The incumbents have about 24% of the vote against about 18% for the far-right Alliance for the Unity of Romanians. The NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballots. Coming up, the French finance minister says his government will not be blackmailed. More from our exclusive interview and market analysis ahead of a critical week for France. That's next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The euro and French bond futures fall as the finance minister tells us exclusively the government will not accept ultimatums over its budget.
We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
President Joe Biden signs a sweeping pardon for his son Hunter, reversing his previous stance just weeks before leaving office. And Carlos Tavares quits Stellantis in a dispute with the board over how to steer the troubled carmaker away from weak sales and a stock slump. Talking of slumps, you should be bracing for a bit of a bruising session in the European session this Monday, with futures pointing lower by almost a full percentage point after a week actually of gains last week for European stocks. French politics will be in focus. FTSE 100 futures currently flat. S&P futures looking to losses of around 0.2%, and Nasdaq 100 futures pointing lower currently by 47 points. Let's flip the board because the focus is on strong dollar, the focus is on higher yields, and the Japanese yen as well. The benchmark US 10-year currently yielding 4.21. Yields up 5 basis points. You're seeing selling pressure across the curve then as we lead up to the non-farm payrolls print out of the US on Friday. Euro dollar currently at 105, 150 on the Japanese yen. Currently a move there of 0.5%. You had comments from Governor Ueda, suggesting that they are moving closer. The data is getting closer to allowing them to hike again. And that possibility then seems to be in focus for December the 18th. That is the meeting at the BOJ. Brent up 0.7%, so a move higher for oil so far in the session. Now, France's Finance Minister Antoine Armand has exclusively told Bloomberg that his government is open to negotiations over the country's budget, but will not be blackmailed.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
OK, that was our exclusive interview with the French Finance Minister, Minister Antoine Armand, which was conducted over the weekend. Let's get more on how to react to France as we look at the market reaction. Of course, it was pronounced last week. And bring in Kevin Thozet, member of the Investment Committee at Carmignac. Kevin, great to have you on this morning. We have this exclusive from the French Finance Minister. What is your base case, then, for how this story evolves in the days ahead?
Morning, Tom. It's clearly not an easy one. I mean, 2024 was the year of the general elections, and that was true everywhere across the world. And 2025 will be the year when those electoral promises get confronted with financial markets. And I think France is a bit ahead in terms of calendar, and that's exactly what we are seeing now. Clearly, the context is very difficult. We do not expect the situation to resolve anytime soon. There's no strong majority in Parliament, and Mr. Barnier's government is really fragile. So in terms of sequence, either budget gets approved and gets voted, I'd say low probability, or then the French government imposes some form of executive order, imposes the financial law for 2025, and then we get this no confidence votes, which could bring us up to next week.
Where does a no confidence vote, where's a toppling of the government, Kevin? Where does that leave the spread? We got to 90 basis points, the French spread over Germans last week before it retraced to about 80 by Friday. How far do we get above 100 if this government collapses?
Well, again, the sequence which has been unfolding was starting with a political crisis. I thought that was kind of last June when we had those snap elections. Then we had financial crisis, and I would tend to think that the financial crisis is more when you're seeing the spreads moving for 40 basis points, as we saw last June, up to 80 basis points, as we saw during the summer, than the 5-7 basis points we saw over the past week. Now we have a budget crisis, and the question is, will it lead to an institutional one? Clearly, the main stress would be if Mr. Macron would be resigning, and there we would have another lengthy period with, let's say, some form of, vacant positions, because the parliament cannot be re-elected until the mid of 2025. Where would that push spreads? I would tend to say north of 100 basis points.
North of 100. North of 100 if Macron resigns. So that is a risk that the markets need to be keeping an eye on. Kevin, talk to us about when you would start to see value in this French debt market. What would draw you in? What level of yield would make this attractive?
It's a very good point you're making, Tom, because in fact we're commenting on the spreads climbing and grinding higher and higher. But in fact, if I'm looking at the evolution of bond yields, those bond yields have been coming lower since the calling of snap elections last June. So again, for now, I don't think that financial markets are stressed. I don't think that the meager 3% or even below that yield to maturity you're getting on the French 10-year is a particularly attractive point from now.
You are seeing opportunities, though, in the equity markets and in the stock markets of France. Where is the valuation? Where is the opportunity there?
Yes, I mean, clearly on the bond side, we're not seeing kind of, a strong bull case for French assets, giving, this potential difficult trajectory which is ahead of us. But on the equity markets, we are seeing some form of, widespread pessimism. And some French assets are clearly trading at a discount. If I'm looking at very kind of, let's say, visible segments, visible teams, notably in the aerospace area, where you're comparing Boeing and Airbus, when you're comparing Safran and General Electric, you're seeing discounts of 30 to 40% on price earnings, on EV to EBITDA, you name it. So I think now could be the time to start slowly, on a step-by-step basis, starting to re-engage on European assets. And that's true for aerospace, it's true across sectors. These things, or these valuation gaps we're seeing in the materials, in the industrial space, in many sectors.
OK, start to re-engage with some parts of this European equity market, and it is a valuation story. Kevin, what about the banking space? I mean, we've got obviously a challenged growth environment, possibly lower rates. What does that mean for European banks?
Yeah, when I'm mentioning the fact that we would start to be looking at some European assets and some French assets, as I mentioned, we're looking for much more for sectors, for stocks, which are, let's say, less sensitive to the economic cycle. Clearly, banking sector does not fall into this category. It's often used as a growth proxy, notably for international investors. So that's one reason to be cautious. I mean, we're not expecting European growth to be doing fireworks. That's more a valuation case than an earnings case across those European stocks. So that's one reason to be cautious. The second one is concerns over political risk, and very often those banks' stocks do not fare very well when this political risk is grinding higher and higher. And the third one is lower interest rates. Clearly, with current French discussion, but it's true for Belgium, it's true for Italy, we are not counting on budget spending and fiscal spending to be doing much of the support in terms of economic growth. What does that mean? It means that the European central banks will have to be doing most of the heavy lifting. And this means lower interest rates and not necessarily, again, a good environment for banks. So 3 reasons to be rather, let's say, cautious on the banking sector, even more so as positioning has been strong this year.
Kevin, before I let you go, what is your projection around ECB rates as we look into 2025?
Well, the key question is what will happen before the end of 2024. Markets are expecting this 50 basis points cut, so assigning, let's say, a relatively high probability for jumbo cuts for the next ECB meeting. We'd be tempted to be sitting more on the cautious camp. 25 basis points seems much more, let's say, probable for the coming ECB meeting, and then all of this bringing, let's say, policy rates down to 1.75% all through 2025. But I think the path is important there. There's no reason for the ECB to accelerate in terms of lowering of interest rates.
OK, keep an eye on a path, a view on 175, maybe, towards the end of 2025. Kevin Thozet, member of the investment committee at Carmignac, steering clear of French debt for now, but finding opportunities in European and French equities on the valuation story. Kevin, thank you. Now to some other stories making news this Monday. French President Emmanuel Macron will be in Saudi Arabia today as part of a 2-day visit where fighter jet sales and geopolitical tensions will feature high on his itinerary. This is Macron's first state visit to the kingdom since the killing of journalist Jamal Khashoggi in 2018 at the Saudi consulate in Istanbul. Volkswagen workers across Germany plan to stage walkouts starting today. That's after Labour leaders and management failed to reach an agreement over how to slash costs at the car maker's namesake brand. VW's management says the company needs to shut down 3 German factories and lay off thousands of workers, but union representatives are pushing to keep the plants open. Coming up, we're going to bring you an exclusive interview with the co-founder and CEO of Robin AI on how artificial intelligence is set to shake up the legal industry. That is next. This is Bloomberg. Welcome back. Now, one industry that artificial intelligence is set to transform is the legal profession. Startup Robin AI is initially focusing on contracts, the core instruments, of course, of legal services. Very pleased to say I'm joined now by Richard Robinson, the founder and CEO of Robin AI. It's a business that is backed by the likes of PayPal Ventures, Cambridge University and Temasek, to name just a few of the investors. Richard, thanks for your time. How much demand are you seeing for your products, for your services across the legal space? What's the outlook for next year?
We're seeing a lot, I have to say. I mean, before ChatGPT, we were seeing growth, but since ChatGPT, we're seeing a lot more. So the outlook for next year is that we expect to grow faster next year than we have this year, which is pretty remarkable, even for a company in the fast growth space like we are.
What does that, Richard, are you able to give us a kind of dollar number on that, an estimate in terms of what you're targeting for revenues for the business?
Yeah, well, we crossed the $10 million mark this month, and we expect next year to at least triple that number, which again, you know, historically, it's impressive if a company at our scale can double. You put yourself in the top decile of growth companies, but we're seeing a lot more demand than that, and we think we can grow even faster.
And which parts of the legal kind of ecosystem are you targeting? What company? Talk to us about some of your clients, what their needs are, and how they are creating efficiencies.
Yeah, we really work with the world's biggest companies. And the reason is that they spend the most on legal services. In private equity, where we do a lot of work, they spend something like 1% of all assets under management on legal services. So that's a huge growth sector for us. And we have customers in that space and got a bunch of enterprise customers as well. People like PwC, KPMG, General Electric. These are all customers of ours who are spending billions globally on legal services. And that's where we're expecting to see even more demand, highly regulated industries.
Yeah, it's highly regulated, and you're expanding globally as well. I know you've got a footprint in Singapore. Richard, which parts of the legal system are you expecting to expand into? What does Robin AI look like in 5 years' time?
Yeah, well, eventually we want to be able to tackle every single legal problem. We're building an AI legal assistant that really anyone in the world should be able to use. But we've started with contracts, as you've noted, because it's the biggest segment of all legal services spend. But over time, we'll graduate to tackle things like litigation, things like consumer legal issues like buying and selling your house. Eventually, AI is going to take on all of the heavy lifting in the industry.
OK, so we might get our own kind of AI legal assistants at some point, which sounds quite useful. Look, Richard, you worked at Clifford Chance. You did the hard graft. You moved up the ranks. Your product, the critique would be your product is going to undermine all of that and have pretty detrimental effects on the labour force as people try to move up in terms of the legal work. They have to do that grunt work to move up and get to partner.
Well, look, I think lawyers around the world are going to celebrate what I'm doing because, like you say, Tom, I did a lot of that grunt work, and I can tell you I don't miss it. The work we're automating is the kind of work that, frankly, doesn't teach you that much, in my opinion, and it's the kind of work people shouldn't really be doing. I think there's going to be a more exciting future for the next generation of lawyers where they're doing more complex work, they're doing global work. We can take the world's laws and we can help encode them in AI. And so the job becomes more human. I think it's very exciting.
But Richard, we're going to have fewer lawyers as a result of this, right?
I think that's right. Yeah, I think we won't need as many people to do the job. But the economy keeps growing. I think the pie is going to keep bigger. And so we're still going to need lawyers, and we'll still need to hire them fresh out of university. So there's still a career there for people.
OK, Richard, thanks so much for your time. Richard Robinson, the founder and CEO of Robin AI. Let's get back to the story in France. We've got some breaking lines coming through from Marine Le Pen, the party chief, saying that she will and they will topple Barnier, the Prime Minister, of course, of France, unless there is, quote, a miracle. So again, Le Pen's party chief saying that they will topple Barnier, the Prime Minister, unless there is a miracle. This is the party chief, Jordan Bardella, speaking on RT. Checking the euro for you right now, trading at 1.05. It comes after Marine Le Pen suggested and hinted strongly that she is firming her stance on this negotiation. And after the finance minister of France, of course, reporting to Michel Barnier, spoke to us exclusively and said that they would not be blackmailed over this budget. Concessions have already been made, but the finance minister suggesting to us that there would be no further concessions, and we saw the reaction from Marine Le Pen to that over the weekend, putting a time frame around Monday, today, to get some movement on that budget. So we continue to monitor this story for you. Now, according to data from MasterCard, switching focus, Spending Plus Black Friday sales in the US grew at a faster pace this year. Let's bring in Bloomberg's Stasha Afanasieva for the details. What have we been seeing about the data, what it tells us about the health of consumer and where they've been spending their money over this spending period?
Yeah, well, Black Friday sales are up 3.4%, but once you strip out inflation, say 2.6%, it's actually not, not that impressive. So I think the consumer is very perhaps resilient, but very cautious, and that tallies with what retailers have been telling the market at quarterly results. If we zoom in to a company like Best Buy, which sells electronics, or Ulta, which is cosmetics, then they were seeing more foot traffic on the big day, but because they've been discounting so aggressively, that's not necessarily going to translate into much higher sales.
OK, so a resilient but a cautious consumer, and we'll see what plays out for Cyber Monday today, of course, and whether that theme continues today. Dasha, thank you very much indeed on, of course, Black Friday and what it told us about where the consumer is putting that money to play. Dasha Afanasieva with the details. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday to everyone. We continue to keep an eye on what's happening with France, of course, and we've had some lines crossing just in the last few minutes from Jordan Bardella of the National Rally, suggesting, quote, it will be a miracle if Michel Barnier manages to get that budget through without further concessions. So it seems like we are reaching a crisis point, at least when it comes to that contentious issue of how to prioritise spending. So we focus, of course, on OATs, sovereign debt of France. We saw the yield spread versus the German counterpart of increasing by about 90 basis points. But we also, of course, keep an eye on the impacts for some of those major French corporates. So we're going to be looking at the likes of Airbus, L'Oréal and TotalEnergies. You're seeing the euro already under pressure as a result of what is passed over the last 24 to 48 hours when it comes to the question of France. It is the key story for these markets at this point. Let's flip the board, though, and look ahead to what will become an important story actually towards the end of this week, and that's on non-farm payrolls out of the US. Expectations, you're going to see a number of 200,000. That's the expected print for the month of November. You do get those Boeing workers coming back, about 40,000 after the strike. This 12,000 number for October is expected to be revised up, according to Bloomberg Economics, to around 50,000. So look for that. You had the hurricane season as well, keeping a lot of labour market data off the sidelines. So that's also expected to come up and give that print of around 200,000. But Bloomberg Economics says still it's not a particularly strong number in the context of all of those factors being taken into account. And they actually see the unemployment rate ticking up to between 4.2 and 4.3%. Let's flip the board quickly and have a look at what all this tells us about the economic growth of the US, where you still have that relative resilience, of course, and you have the data coming through. We're going to get more data that's going to build out this picture, of course, but this is a story of relative resilience still. And again, we monitor the labour market on Friday. Expectations around the Fed, 60% chance they go again this month with another cut, and that you get to below 4% on the benchmark rate by around July of 2025. But we'll see how that adjusts on this data. Coming up, we're going to be speaking with the European Banking Authority Chairman, Jose Manuel Campa, after it publishes the results of the annual transparency exercise and a risk assessment report. That conversation starts at 7:45 a.m. UK time. The opening trade, though, is next. This is Bloomberg.